Hello friends and viewers, welcome you all to your channel Big Bull Trading. Today in this video I am going to show about and discuss about the candlestick pattern. Whenever we are doing a trade, whether it is intraday trade or swing trade or positional, our candlestick pattern is very important. It's very important to know the basics for doing the trading. So candlestick patterns, support resistance, trend lines, these are some of the basic things what you should know. So today in this video we are going to discuss regarding the candlestick pattern. So first I will explain you that some of the famous or popular candlestick patterns what I follow, and then I will show you in the charts. And friends, if you like this video, please share it with your other fellow traders and groups so many other persons can also benefit from this trading video. So first we will start without wasting the time. Directly I will show you the candlestick patterns. So as you can see, this is the basic candlestick pattern. Okay, this is the bar. So candlestick bar, it looks like this. This is known as the upper shadow. As you can see, I have already mentioned, this is the upper shadow, this is the lower shadow, and this is the body. The body sometimes can be of this size, sometimes can be of smaller size. It in the different videos I will show you. Sometimes it can be big, sometimes it can be the full bar. So different type of body size can be there, but the very basic what you should know first, this upper part is known as the upper shadow, this lower is known as the lower shadow, and this is known as the body. So now we will show you what is a bullish bar. So as you can see in this picture, this is a bullish bar. So what is a bullish bar? Bullish bar means the color will be green. First, the easy way to understand is the color will be green. That means it is a bullish bar. Bullish bar means whenever it is green, the opening will be the low. See, this is the low. This is the opening of the bar and this is the closing of the bar. So from whenever it goes from open down and it goes up, then it is a bullish bar. What does this bar mean? Suppose for example, this one, the stock opens at 150. The price of the bar opens at 150. Then it goes maybe up to this level 152. Then suppose the candle again comes down. It makes a low of 148. It goes up. It makes a high of 156 suppose. And it closes in this price 154. So you understand, this is first, this is the open. This is the open of the bar for the bullish. The close will be above. So this will be when the open price is lower and the closing price is higher. That means a bullish bar, and it is represented by the green color. And in the top, the maximum point what it touch is the high of the candle, and the lowest, the minimum point, this is the low of the candle. These candle bars can be of 1 minute, 2 minute, whatever you choose you can make. Accordingly you can do the trading. So we will go to the next, the bearish bar. So what does the bearish bar means? Bearish bar is just the opposite of the bullish bar. So how you know it is a bearish bar? First, the easy way to understand, it will be red color. Red color means the price is falling down. So this is a bearish bar. Over here you see the open is in the up. So suppose this price is 160. So the stock opens at 160. It comes to a level of suppose 158. Then it goes little above, it makes a high of 162. There is a pressure from the sellers, the bears, and it comes down and it makes a low of, for example, 150. And then some buyers again push the price higher and it closes around 154. So this is the simple step in which I am showing you the candles. So two type of candles. One is the red bar, that is the bearish bar. One it is the green bar, that means it's a bullish bar. And you can see the price what I have written. From there you can understand. So now I will show you, this is the basic bar, the red and green I showed you. Now I will go you some of the famous patterns what are there in the candlestick patterns. But friends, one thing you should remember, if you are watching this video, by watching this video, if you are watching this video or some other channel's video, it does not matter. Whichever video you are watching, you have to watch it, number one, at least the full video. If you don't have time, save the video, see later. Secondly, by only watching the video once, it will not help you. You have to watch the video over and over again to understand. At least 2-3 times you have to understand the very basic things. Then you have to see maybe even more times to get the more knowledge of that. So we will continue to the other patterns. Now we will continue with the patterns. So this is the very one of my favorite pattern, what is known as the bullish pin bar. The name of this type of bar is the pin bar. What does it depict? Whether it is red color or green color, it does not matter, but this symbol is a very bullish sign. Okay, so what does this mean? Suppose the price here starts, okay, so 160 the price starts, it comes, it falls. For example, it comes to 150. So all the buyers trying to push the price higher, it goes up and close here. This type of bar is a bullish pin bar. So you should remember this type of patterns. This is a bullish signature. It's a very long wick. That means there is a rejection. The buyers are pushing the price higher. So it is named as the bullish pin bar. And friends, please watch the video. This is the type of bars. After that I will discuss how for any candlestick pattern, the location is very important, where it is formed, how it is formed, all together will help you in the trade. Only by looking this type of pattern it will not help you. So try to understand it in a simple way I am explaining you, and try to listen every words carefully. So we will go to the next pattern. So the next pattern is the opposite of that, that is the bearish bar. As you can see here, the bar, there is a long wick, okay, but the body is towards the bottom. What does it represents, or signature, what does it tells? It tells when the price is going higher, the sellers are not liking it, they are pushing the price down. So in this case, the sellers are more active and they are trying to push the price below. So this is a bearish symbol. So we will go to the next one. These are all single candlestick pattern, and after that I will come to the double candlestick patterns and the triple ones also. So this is named as the doji. What does the doji means? A doji means, see over here, if you see, there is a wick of what size? There is a wick of this size also, more or less. Means the buyers and sellers are confused in these cases. Okay, so this may be red color, this body, or maybe green color, but see the wick is the more or less equal. So the buyers and sellers are both are dominating, so it come in a stagnant price. So for the doji we will show another pattern is there. This is one type of doji, this is another type of doji also. See the price where it opens, it closes there. So buyers and sellers both are equally strong. This is again another bearish symbol. This is known as the gravestone doji. What does it represent? See where the price starts, from here the price goes up, correct? For example, suppose this is 150, all the price go up to 160. When it comes to 160, the sellers are very active. They want the market to go down. They are pushing, and they again bring it to 150. So this is another bearish pattern. Now this one is just the opposite. This is named as the dragonfly doji. So what does it means? It's the opposite. A long rejection is there from the sellers. So the buyers are interested when the price, this is the opening price, correct? So this is 150, the price falls to 140. When the price falls to 140, the buyers want to make the price higher, and they are pushing the price higher, and they close at the same level. So this is again a bullish pattern. Now this is a very simple pattern and very powerful. The name of this pattern is Marubozu Power Bull Candle. So this is a bull, this is full of strength. See, there is no such weak is there, full body. Means the buyers are in total control and they want to push the price higher. This is just the opposite. This is a total red Marubozu bear candle, bear power candle. These are very powerful bars. Whenever you see this type of patterns in the bars in the chart, you can see these are with lot of powers. Means the total sellers are dominating. When it is green, total buyers are dominating. Next we come, this is a double candlestick pattern. This is the bearish engulfing pattern. Sorry, this is a bullish engulfing pattern. So why it is a bullish engulfing pattern? First a red bar is formed, okay, so means the price is coming down, correct. For example, this is 100, this is 90. Instant the next moment what happens, when the price come down, the buyers are very much positive here and lot of buyers, and they instantly put the price higher. So this is a bullish candlestick pattern. So whatever bearishness is there, it's totally taken out by the single candle in the next bar. So this is a bullish pattern and known as the bullish engulfing. Means this one is being engulfed. All the bears are being taken out by the bulls. So the next pattern is just the opposite. This is the bearish engulfing. So what does bearish engulfing mean? For example, the price was here, it goes up, then the sellers are very active and they put the price totally down. So this is the bearish engulfing pattern. We will go to the next pattern. This is known as the bearish harami pattern. So when you see a pattern is formed, a green in between this red, so it's a bearish one. And same this one is the bullish pattern, bullish harami pattern, this one. So this is the known as now the next, the piercing pattern. So what is the piercing pattern? For example, you can see here the price is falling, down, correct. So this is the closing price. What happens? There is a gap and suddenly the price comes here. For example, the closing price is here 90. Here the starting price of the next bar is maybe 88. So already there is a gap of 2. So it falls and it goes up. So this is a piercing pattern. This pattern is named as piercing pattern. So we will go to the next chart. This is known as also the dark cloud pattern. So first of all, this is a green candle. Next is the bullish one. It opens the above and it comes down. This is known as the morning star pattern. Okay, morning star pattern. First is the red candle. Then again you will see a red candle and then it comes a green candle. This is also one of the patterns, morning star. You will see in the many YouTube videos or many traders are following this pattern. And this is known as the evening star pattern. First of all green, then another green, and it comes in the red. So now for this type of traders, this is the candlestick patterns. So how you, first of all, you know these patterns. So how you locate the patterns or when to take the trade in these patterns. For taking the trade, this pattern should form in the extreme zones. Means it's coming, for example, the price is coming down like this. Whenever here a bearish pin bar is formed, then this is active. Okay, for example, the price is coming here in the day, again it goes here, and again here it forms a bearish bar or bullish bar. This is not valid. So always it should be in the extreme locations, or maybe the price is going up like that, and over here a bearish pin bar is formed or a bullish or a bearish engulfing pattern is formed. So then this is valid. So it should be at the extreme locations and it should be near any support or resistance zones. For example, the price you see over here, it's the old price. Okay, it goes like this, like this, like this, and today the price comes here in this zone, and here it forms a bearish engulfing. So you can sort, because you see there is a resistance zone. So support and resistance zone you have to find out it, and it has to be in the extreme locations. Number one. Number two, where you should be making the entry point. The entry point should be above the candle's high or above the previous candle's high. So now I will go you in the chart and I will show you some of the patterns, so it will be much more easier for you. So I will just go to the charts and I will show you now. For example, now friends, you see this is a Bank Nifty chart. So first we will go to the 5 minutes time frame to show you. Then it will be easy for you to understand. See friends, first of all I will show you one of the patterns. Wait. Yeah, you can see here this pattern. See here it forms a doji. Where it forms the doji in the extreme locations. Okay, so this means this is a powerful to UK for the reversal trade, and you should take the whenever a doji is there, you see there is a support zones also in this zone, and your entry should be above the previous candle's high. So here you should enter, you should be the stop loss here, and accordingly you can make the trade. For example, this is for the doji what I am showing you. I will show you some of the other patterns also. See here pin bar is formed. Okay, but the pin bar what is formed, even if you can tell sir there is a support, can I take the trade? Yes, maybe you can take the trade, but what you will do above the high of the previous candle, but it does not cross, so this is not valid. You understand this point? So I will show you some of the other patterns. Wait, I will just change it to 15 minutes so it will be easy for you. See here, this is another pattern formed. This is the bearish pin bar which is formed at the extreme locations, means at the top. So if you short today here the market with a stop loss above this, if you would have get a rally, correct? But remember one thing, it's not like that always you will be getting. Sometimes your stop loss will be hit. That is the reason you should always trade with the stop losses. That's why you see in my live trading videos, for the scalping videos, most of the videos what I make, it's always with the stop losses. See, I will show you here two things you can understand. See, first here in this video you see, in extreme location, this is the first, this is the pin bar. You could have taken the trade and you could make this profit first, okay, as you have seen in my video. See here you see there is a bearish pin bar, but will I take the entry? No. Why no? First of all, two options are. The safest option is you should take the entry below these candles. When this candle low is broken, you could have taken the trade. Number one, this is for the safe trader. And those who are aggressive trader, maybe they have taken the trade here, their stop loss would have been hit. Understand? So this is how it works. So I will show you some of the other patterns also. For example, if I get some bearish engulfing or bullish engulfing, yes, you can see here. See, this is another pattern I will show you. This is the bearish engulfing pattern. It makes here, there is a resistance zone above this. Wait, I will clear it and I will show it to you. Yeah. See, this is the, first of all, this is the bearish pattern. This is the resistance zone. So if you have taken the trade here with a SL above, you could have made some 1:1 ratio. If you put here, see how much is your, let's see, your stop loss is 148 points. Your target, you could have got 1:1 ratio like that. It will not work always, friends. That also you have to remember. So this is how, friends, you can use the basic candlestick patterns along with the support and resistance with trend lines like that. So friends, if you want a video for the trend lines or support and resistance, please do comment me also here, so I will make the videos on those topics also. And friends, the one thing what I always want from you, please share it with the others, because we are giving time in making these videos. And if you share the others, many other retail traders are there who can also benefit from it. So friends, as of now, thank you and bye bye.